Good morning. It is Monday, May the 4th, 2026. Hope everyone had a nice weekend. My youngest son had a birthday, so little Hank, baby Hank, turned 2. So, we put some little streamers up outside his room. He seemed like he enjoyed the day, so that was good. Rainy, much needed rain here in the Low Country. So our grass is happy. Soccer game unfortunately was canceled, and the bigger disappointment was the Blue Angels. That the Charleston Air Show was supposed to be Saturday, and unfortunately had to cancel that as well due to the weather. My middle child, big into airplanes and the Blue Angels, and so he was really excited to go. And our family, we went out and we sat in the rain for a couple hours, and then they canceled it, which was unfortunate. But I told the kids, like, let's go out. The weather's not great, but let's get. It's okay to be uncomfortable, and I think it was a good lesson for everyone in the family. And there's minimal complaining. I was actually quite impressed with my little crew. So. So we hope you had a nice weekend as well. Just a quick reminder, we've had a handful of RSVPs coming in. If you do plan on attending our Client Appreciation Memorial Day event, James Island County Park, Coastal Crust, the food truck, they make some really good, the wood-fired pizza. So we hope you can come. If you can, just let us know, because we need to let Coastal Crust know how much pizza to bring. So we would appreciate that. All right, looking at markets last week, markets again higher by a little bit. There was a Federal Reserve meeting last week. As expected, no change in interest rates. The more interesting parts of the Fed event was that 4 members of the Federal Reserve objected. So they had a dissenting opinion to language in the Fed's post-meeting statement. Okay, so basically 4 of the 12 Fed members coming out and saying, hey, like we're more concerned with the price of oil and the probability of inflation increasing here due to Middle East tension and whatever else. So that was interesting, particularly with the new Fed chair likely coming in very soon. So on that, you saw interest rates. I mean, markets they respond so quickly. So right when that statement comes out and you see the dissenting opinions, yields start rising, right? Because it's pricing in the probability of the Fed maybe not being so dovish moving forward, right? So rates have been steady here for a bit, and many market participants, we're kind of thinking, hey, we're going to get additional rate cuts throughout 2026. Where right now, that doesn't seem like the case. So we'll see the way that it all plays out. So that would be more of like in terms of stock markets, that's like a bearish note, some kind of reason for concern. But then, the tailwinds that we have, and at the end of the day, this you've heard me say this a lot, but this is what drives stock prices. Like this earnings season, not a lot of people are. I don't think it's getting enough press, right? Like this earnings season has been outstanding, like really, really strong. 63% of the S&P 500 has now reported. Earnings this quarter are on track to exceed 14%, from a year ago. This same quarter from a year, 14% growth. And remember, at the end of the day, that's what stocks are, right? It's you as a fractional shareholder, you have that fractional claim to cash flows and profits of businesses. So when you see profits expanding like that 14% year over year, like. Now the rally makes a lot of sense over the last year or so, right? And so I think I read it was the 6th straight quarter of double-digit growth, in terms of like annualized growth. So definitely, when you're looking at valuations, right? So you have like market price divided by earnings, right? So For those concerned with stretched valuations, if you see that in the financial media, well, when you have earnings growing the way they are, that's increasing the denominator rate. So the bottom, the bottom half of the equation, which that helps valuations look more attractive, right? So we'll see. But earnings have been quietly just outstanding this quarter. Last week also we had the GDP report, which is okay, not great, but okay. PCE, the Fed's preferred inflation metric, also came in a touch higher than expected. This week, usually the first Friday of the month, we get the jobs report, right? So we'll get the April jobs report on Friday, which a lot of eyes will be on that for a number of reasons. So questions, comments, concerns, don't hesitate to reach out to our team, and we hope you have a wonderful week. Thank you.